Namaste. In this video, we will discuss about Indian Accounting Standard 23 that talks about borrowing cost. We will discuss about core principle of India's 23, scope of it, definition, for eligibility for capitalization, commencement capitalization, and cessation of capitalization. Apart from this, we will discuss about disclosure requirements in the IAS 23. Borrowing cost can be of two types. One is in nature of operating expenditure. If it falls in operating expenditure nature, we need to book it in P&L as an expense. If it is of nature of capital expenditure, then we need to capitalize it. So it can be of capital expenditure nature if it is incurred for acquisition, construction, or production of an qualifying asset. IND 23 does not apply to cost of equity, including preference share capital that is not classified as liability. Preference share can be classified as convertible preference share, and these are considered in nature of equity. So cost of convertible preference shares is not included in scope of this IND. And if preference shares are redeemable, these are considered as borrowing cost. Assets, those are measured at fair value. For example, biological assets as per IND 41 are not considered as, because impact of fair value and carrying value is already taken in P&L account. Next category is inventories. Those are manufactured in large numbers and on repetitive basis, like cars and alcohol, etc. Borrowing cost can be defined as an interest and other cost. Other cost in respect of arranging the loans. It may be the transaction cost or premium paid, etc. Borrowing cost includes expenses calculated using effective interest rate as per IND AS 109, interest in lease liabilities as per IND AS 116, and exchange difference on foreign currency loans to the extent it does not increase the local borrowing cost. Let's understand what is effective interest rate. For example, an entity has taken loan of rupees 100 crores and the rate of interest is 10%, and processing fees for arranging the loan is 5%. It will be called as other cost. So what is net inflow to the organization? It will be of 95 crores, because 100 is the loan amount, sanction amount, and 5% is the processing fee. So net flow to the organization will be of 95 crores. But at the end, what will be the outflow from the organization? It has to pay 100 rupees as loan and 10% interest rate. So 10 rupees as an interest cost, considering that loan amount is for 1 year, 10 year. So it's the outflow of 1110. There was a net inflow to the organization of rupees 95. So borrowing cost will be 15 crores as an interest and 5 crore as an processing fees. So if we calculate the effective rate, what was the cost of loan to the organization? It will be 15.79%. Assets, those take substantial period of time for getting ready for intended use or for sale, will be classified as an qualifying assets. It can be inventories, manufacturing plants, power generation facilities, intangible assets, investment properties. If the asset takes short period of time for getting ready for intended use, will not be qualified as an qualified asset. How to recognize borrowing cost in books? The nature of operating expenditure, it has to be recognized as an expense in P&L, and if it is in nature of capital expenditure, it means used for acquisition, construction, or production of qualifying asset, and there is surety that flow of economic benefits will be there to the organization and cost of it can be measured reliably. In that case, borrowing cost will be capitalized. When dealing with borrowing cost, we may come across about two types of borrowings: specific borrowings or general borrowings. In case of specific borrowings, we need to capitalize actual cost, and for a shorter period, if borrowings were invested, that income will be reduced from the actual cost. In case of general borrowings, we will use capitalization rate based on the weighted average rate. An organization should commence the capitalization of borrowing cost when it incurs expenditure for assets, it incurs borrowing cost, and it undertakes activities necessary to prepare the asset for its intended use or for sale. It may be physical construction of the asset or technical or administrative work prior to construction is initiated, or activities related to obtaining permits for starting physical construction of the assets. An organization need to suspend the capitalization if activities necessary to prepare the assets for intended use or for sale has been suspended. But an organization should not suspend the capitalization if it carries a substantial technical and administration activities, although the physical construction has been stopped for the time being, and there is a temporary delay that is necessary or is in common for preparing the assets for intended use or for sale. We should cease the capitalization of borrowing cost if all the substantial activities in respect of qualifying asset for its intended use and sale have been completed, but administration work, decoration or minor modification are not considered as substantial activities, and if administration, decoration or minor modification etc. is although is not completed or is in process of completion, we should cease the capitalization of borrowing cost. And in case qualifying asset is in part and each part of it of the qualifying asset is capable of being used as separate asset, we should cease the capitalization. We need to disclose amount of borrowing cost that we have capitalized and the capitalization rate that we have used. This is basic understanding of Ind AS 23 borrowing cost. If you want to know more, learn more, want to see some more examples, you are most welcome to reach us on the given contact number. And if you have any question in respect of any Indian accounting standard, you are most welcome to comment on the video. Thank you very much.